Hi, everybody. David Blain here. Well, it's been quite an interesting start to the new year, as I'm sure everybody has been watching the news. I've been kind of holding off updating you after the election to kind of see what happened. Of course, there was some uncertainty with the Senate after the November election, and so we wanted to wait till that runoff was done. And then, of course, with the Capitol and now impeachment and all sorts of things going on, there's still a little bit of uncertainty out there. But I think we're at a point where I'm comfortable going ahead and talking about what we see for 2021 and recapping 2020. There's a lot of information with a transfer after 4 years of a largely Republican-led Congress. As you recall, President Trump and the Congress in the hands of Republicans. And then the last 2 years was split government, switching over to ostensibly 100% control by the Democrats. As you can imagine, there's a lot of potential changes on the horizon. And so there's no way I'm going to be able to cover that in one segment. So what I thought I would do is break this up into several different videos. This one here today will be just kind of an introduction or recap of what happened in 2020 and a highlights of some of the different areas that we need to look for in 2021. Then I'll go back and I'll make detailed overviews. For example, I'll have a whole video on tax planning. And if you don't really care about tax planning, then you can skip that video. I'll give you the highlights here today in this video. Or like real estate, we're going to talk about real estate. If you don't care about that, you can skip that whole video. But I think that'll be nice to be able to get some of these ideas out there here early in the year that you can talk about with your advisory team or send me a note if you have some comments. But I think that'll be a good way to do it. So we'll go ahead and kick things off here with a review of 2020. So I don't need to remind you that 2020 obviously kicked off a global pandemic in March, and the market subsequently declined pretty significantly. At BlueSky, we took advantage of that and did some tax loss harvesting for those of you that have taxable accounts. And that worked out really well because the markets definitely recovered during the year. The S&P 500 returned 18.4%. The NASDAQ, which is your technology companies, returned 45%. But most markets had a very good year in 2020. Overseas, emerging markets recovered a little bit. Oil notably was down about 20% for the year, and REITs were off slightly for the year. Although private real estate, for those of you that invest in private real estate with us here at BlueSky, our private real estate investments did very well, continue to return very good returns for us. Okay, so moving to 2021, what's the outlook? Obviously, COVID is the big thing. We think that will resolve itself probably towards the summer. And globally, we'll see a return to some growth. We'll see monetary stimulus policies continue. Inflation, we think, will continue to be moderate. And the US, China, and the Eurozone all should experience pre-COVID growth levels, if not in this year, certainly by 2022. So as far as capital markets go, for the stock market, we would expect not a year like 2020, but we would expect, somewhere in the 5% range, maybe 6% returns for equities. Bonds, we think interest rates will continue to stay low in the sub 3% range. And so those returns, whatever the yield is today, 1% or so, and high yield, maybe 3 or 4%, we think those are pretty good indications of what the market will be in 2021. Gold, probably still some outperformance in gold, although there's some risks involved there. And there are some themes, of course, the Biden election, some of the investments in healthcare, maybe infrastructure, stimulus, those type of things. So we may look at some tilts and changes to the accounts based on that. But just kind of in summary, equity markets, a couple of 5-6% return, bonds, maybe 1 or 2%. We think inflation will continue to stay muted. Tax policy, as I was alluding to in the beginning, a lot of changes proposed. Now remember, these are things that are proposed. None of this is official, but this is what proposed. Essentially, if you look at, if I could summarize for individuals, if you make over $400,000 a year, your entire financial picture is going to change, and the majority of your planning is going to have to be redone. Almost every tax policy, not all of them, but most of them are targeting people that make over $400,000 a year. Increased Social Security taxes, increased tax bracket, federal income taxes, increased capital gains for people in the highest brackets, no step up in basis on death, itemized deduction limitations, QBI, qualified business income phase outs, and things like that. There are a few expansions of child tax credit and dependent care credit on the table as well. But essentially, the tax policy is targeted to, I don't want to say punish, but to affect the people that make over $400,000 a year the most. On the corporate side, once again, looking at increased taxes to a 28% rate, as well as bringing back an alternative minimum tax for companies that make over $100 million a year. Some global intangible taxes doubling. We're also looking at some small business workplace retirement plan tax credits and some renewable energy credits. So on the tax side, definitely looking at increases in tax on corporations and individuals for sure. A few additional tax credits possibly for people below those levels and for some smaller business in the retirement planning arena. On the estate tax, big changes proposed here. A huge one that will affect everybody is no step up in basis. And what does that mean? It means that no longer when someone passes away can they pass their assets to someone else without paying tax. There's even a proposal, what's called a deemed sale at death, meaning you would owe tax on all that appreciation at death. They're proposing reverting to the 2009 limits, which would be about $5.8 million exclusion. On the insurance side, life insurance, there's still tax-free, so there may be some opportunity there. They're looking at expanding the Affordable Care Act subsidies for those people that buy your own insurance, as well as a public Medicare-like option for people that do not have group health insurance. Looking at expanding the long-term care tax credit, as well as enhanced deductibility, and lowering the Medicare age to age 60. So that's some things on the insurance side, mostly in the health insurance side, some big changes that they're looking at. Retirement planning, also some big changes, looking at replacing a deduction for your 401k, IRA, those type of things, with a 26% tax credit for any contributions you make. That would make the Roth appealing for higher income people and actually less appealing for people that are below the 26 bracket. It will completely flip the concept of tax planning for retirement if that is enacted. Looking at RMDs moving to age 75, that's actually kind of an offshoot of the COVID. So postponing RMDs for a year, and then right before COVID, the age had increased to 72. They're looking at moving to 75. Some things about student loans, matching contributions in your 401k for student loan payments, and looking at some big changes for Social Security, messing with what are called the bend points of Social Security, such that people, the minimum someone would receive from Social Security would be a lot more than it is today. Also looking at people that live above 80 years old, getting a little bit of an extra boost, as well as increasing the widow's spousal benefits when one or the other spouse passes away. The last area that I want to highlight here today that we'll be making a detailed video on is real estate. So there's a number of legislative proposals by the Biden administration to make it more difficult to evict renters for not paying their rent. A first-time home buyers credit to bring that back for first-time home buyers, and making some more affordable housing type programs available for investors. But the big one is the Biden administration has proposed eliminating Section 1031 tax-free exchanges for any taxpayer that makes over $400,000. So that's kind of the summary broken down, a little bit of year in review, some outlook for 2021, as well as some proposed changes in each one of those areas. So that's all I wanted to hit on today for this overview video, just to kind of give you a highlight of what's going on in each one of those areas. And then I'll be making some more detailed videos and explanation in each one of those areas. And so you can tune into those that are of interest to you and skip the ones that you're not interested in. So that's all I have for today. I hope your 2021 is off to a great start, and that I wish you all the best for this year. And hopefully you'll be able to catch my other videos here coming out shortly.